Man, it feels like anything with AI in its name is just soaring right now, doesn't it? And that has one question on everyone's mind. Are we in a bubble? It seems like a simple question, but the answer is pretty complex. So in this explainer, we've broken down all the key analysis into a really clear framework to help you see what's actually going on behind all the headlines. Let's dive in.
You've got a lot of veteran market watches out there sounding the alarm, pointing to these crazy valuations and calling it a classic bubble. But then you have others arguing, no, this is a real technological revolution. So who's right? Well, to figure that out, we've got to go beyond the hype and really build a structured way of thinking about the whole situation. So here's our game plan. First, we're going to look to the past for some clues. Then we'll dig into what makes this AI boom so incredibly different from anything we've ever seen. We'll pinpoint the warning signs that could signal the party's over, talk about the inevitable great shakeout, and then we'll translate all of that into a clear strategy for investors. Let's get started. To really get a grip on what's happening right now, we need some context. You know that old saying, history doesn't repeat itself, but it often rhymes? Well, by looking at previous market manias, we can start to spot the crucial differences that really define the environment we're in today. I mean, over the last 40 years, we've seen this cycle play out again and again. In the 80s, you had Japan's bubble, fueled by this belief that land in Tokyo could never go down. The 90s, of course, brought the dot-com boom, where it was all about how many clicks you got, not how much money you made. Then came the US real estate bubble, built on the wild idea that housing was a sure bet. Each one had its own special flavor of craziness, and, well, we all know how they ended, which, of course, brings us to today. But here's a really interesting thing. The vibe of this bubble is just different. Think back to the dot-com boom. The technology felt real. You could touch it. You could use the internet, send an email, maybe even throw together a simple website. With generative AI, most of us feel like we're on the sidelines. I mean, besides asking a chatbot a question, it's really hard to get a real hands-on feel for its impact. It makes the whole thing feel kind of abstract and far away. And you know that feeling of being on the outside looking in? That's not just in your head. It actually points to a much deeper truth about what's going on. This bubble is built on a fundamentally different structure. It's a completely unique setup that really sets it apart from every other bubble we've seen before. Okay, this is probably the biggest, most important difference right here. Past bubbles were what you might call full participation events. The dot-com boom created tons of jobs for web designers. The housing bubble created jobs for real estate agents. The public was in on the action. This time, it's a boom being driven by a tiny handful of elite corporations, and it's happening at the exact same time as huge layoffs across the rest of the tech world. And when we say elite, we are talking about a staggering amount of money. Just 3 tech giants, Meta, Google, and Oracle, recently raised the equivalent of 10 trillion yen. And get this, they're not just raising some short-term cash, they're issuing 20- and 30-year bonds to bankroll this AI arms race. This point about Oracle is so telling. Now, a BBB rating, that's decent. It's not a straight-A student, It's fine. In any normal market, a company like that would have a hard time raising this much long-term debt. But in a bubble, investors have this almost bottomless appetite for anything connected to the big story. It's a classic flashing red light that we are in a very, very unusual environment. Okay, so every party has to end, right? Every boom eventually has to face a reality check. So, what are the triggers we should be watching for? What are the signals that could finally pop the generative AI bubble? It pretty much all comes down to one company, NVIDIA. They're the ones making the specialized chips, the GPUs, that are basically the engine of this entire AI revolution. It's the classic shovels in a gold rush story. Everybody's digging for gold, but NVIDIA is the one selling all the shovels. That makes their financial health the ultimate bellwether for the entire AI ecosystem. The market's whole story of unstoppable growth is pretty much resting on their shoulders. And this right here is the magic number, 65%. For the last couple of years, NVIDIA has maintained this almost unbelievable 65% operating profit margin. To put that in perspective, that means for every $1 million of chips they sell, they're making $650,000 in operating profit. That kind of hyper-profitability is what's propping up the entire market's valuation. It's just wild. So, what happens if that number even starts to wobble? A drop in that margin would be a huge red flag. It would signal that maybe competition is finally kicking in, or that pricing pressure is building, forcing NVIDIA to become more of a normal company. And That could absolutely shatter the myth of endless growth and trigger a massive rethinking across the entire sector.
And it's not just Nvidia, of course. We also need to watch for signs that the flood of new money is starting to dry up. For example, what if a huge, hyped-up IPO, like a potential one for OpenAI, kind of fizzles? That would show investor appetite is fading. We also need to watch for a shift in how we see the economy. What if interest rate cuts start being seen as a sign of weakness, not strength? And finally, what if more AI companies just can't meet their earnings targets, like we saw with Palantir? That just proves the hype is getting way ahead of the reality.
All right, so let's say the music stops, the bubble pops. What happens then? For that, we can actually look at another tech revolution for a really great analogy, the video game industry. It gives us a blueprint for what we might call the Great Shakeout. Just think about the early days of video games. First, you had this rapid expansion, right? A flood of different consoles and game companies hitting the market. Then came the shakeout, where almost all of those games and platforms just disappeared. They became junk. But out of all that chaos, you had a consolidation. A few dominant players, like Nintendo and Sony, and iconic franchises like Mario, came out on top as huge, long-term winners. And this is exactly what we expect to see in AI. It's going to be ruthless. We're going to see a massive consolidation where countless AI apps and companies that are hot today will just be wiped out, totally obsolete. What you'll be left with is a handful of giant winners, standing on top of a mountain of failures. Okay, so after all that, what on earth are you supposed to do? We have this totally split market, a crazy speculative party in one corner, and then everything else. How do you actually navigate this thing? Let's talk strategy. First things first, you have to understand the kind of game you're playing if you jump in. Some of these stocks have what's called an implied volatility of 100%. That means the market is pricing in a 50-50 chance of the stock either doubling in price or getting cut in half. Let's be really clear here. That's not investing. That's a coin flip. It's a binary bet. And for most people, the best advice is probably just to stay away from that table.
But look, this creates a whole different kind of stress, right? The fear of missing out. If you're holding a solid dividend-paying value stock, you're probably looking at this AI rally and thinking to yourself, am I making a huge mistake sitting this out? It's a totally normal thing to be feeling right now. So here's a really simple check you can do for yourself. Just ask two questions. 1, has my stock actually gone down in value? And 2, am I still getting my dividend? If the answers are no and yes, then your reason for investing is still perfectly fine. You haven't lost any money and you're meeting your goals. Success isn't about chasing the hottest new thing. It's about making sure you're achieving your own objectives. All right, let's wrap this all up. What are the big takeaways? We've seen that while the AI market has all the classic signs of a bubble, it's a totally unique kind, one driven by corporate elites, not the general public. We've talked about how a great shakeout is probably coming, just like it did for video games. And really, it all points to one big conclusion. A disciplined strategy that's focused on your goals is always going to be better than chasing speculative hype. So we'll leave you with this final thought. The single most important lesson from every bubble in history is that for every single Amazon that made it through the crash, there were hundreds of pets.coms that got completely wiped out. Look, the technology itself is real. This isn't going away. But the shakeout, it's going to be absolutely brutal. Which leads you with one critical question. How do you position yourself to make sure you don't become one of the losers? Thanks for joining us.